Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Matt Camuso. He is ETF strategist at BNY Mellon Investment Management. Matt, always great to see you. Thanks for joining me.
You as well. Thanks for having us.
Yeah, and great to see you here down in Miami at ETF Exchange.
We're very excited to be here.
So tell me, what investor outcome or problem are you focused on?
Right now, the topic of a lot of client conversations is around managing risk. I think that's obviously natural with all the volatility we saw last year, and clients want to know what types of solutions can I build in to my portfolio with the ETF wrapper to help me navigate volatility.
Okay, so ETFs, do you have any that you would like investors to consider?
Yeah, so one we're talking about a lot right now is our Concentrated International ETF, which is ticker BKCI. So BKCI is an actively managed ETF by Walter Scott. Walter Scott's an investment specialist firm with inside BNY Mellon Investment Management. They're based over in Scotland. They have a 40-year history of running bespoke equity portfolios, so bring a lot of experience in active management in the equity space. And I think if you look at Walter Scott's investment philosophy, it can sound quite simple to some. They're looking to find great companies that have the ability to adapt, evolve, and innovate to not only survive, but thrive throughout market cycles. And it's really evident in their investment process. So this is a true bottoms-up built stock selection process, picking 25 to 30 stocks within the international universe that Walter Scott finds attractive, or they'll call their best ideas, really focusing on fundamentals. So they want to see companies with high profitability, strong earnings, and persistent growth. And I think if you look at the outcome of that portfolio, what you see is when you lift up the hood of BKCI, two really main risks that our investors are talking to us about are inflation and interest rates, right? Higher rates. So if you look at our ETF relative to its benchmark, really two metrics to look out for are operating margin, which is the ability of a company to manufacture their product and pass along the cost to manufacture to the consumer to help battle inflation, and then net debt to equity. Obviously, the lower the debt, the less costly it is to service that debt at higher rates. And if you look at BKCI again relative to the index, there's a significant improvement on both operating margin as well as net debt to equity. And the result of that last year, if you look at 2022 as a whole, BKCI actually provided drawdown protection of 390 basis points relative to the MSCI EAFE Growth Index. So again, helping clients navigate a very volatile market through a very experienced active process.
Okay, so where should investors go to learn more about this?
Of course, you can go to www.bnymellon.com.
All right, well, wonderful to talk with you, Matt.
Great to talk with you again as well.
And that's ETF Leaders, powered by the New York Stock Exchange.